Hello, hello, hello. Yes, back with you on the Crypto Sniper channel, drinking out of our bespoke, beautiful Crypto Sniper mugs. Yes, have a sip with me. Warning, trading may be addictive. You get the Market Sniper logo on the other side. Look at the grey t-shirt. Oh, I'm being a bit of a merch tart at the moment, aren't I? Luminous green in grey. Absolute merch tart. Let's talk about what we're here to talk about. You can buy the t-shirt and the coffee mug below if you want it. It's absolutely optional. We're going to talk about a key thing that might have just been happening over the last few days. So I've been rattling the sabers a little bit with the premium community that all is not entirely well with our anti-fiats. Anti-fiats includes crypto, and it includes God market of crypto, Bitcoin, and my current flying favorite and major hold that I've been lightening up on throughout the last few days, Ethereum. So we're going to talk about the big two. We'll also run past some of the things that have gone past with the other coins to a little bit of a degree. But always with me, it's the 360-degree eye view. It's what has been going on outside of crypto that'll affect crypto. Remember, crypto's a mouse surrounded by elephants. I'm afraid so. It's still that way. Couple of 100 billion market cap, that's nothing. Apple could buy you 20 times over. Yeah, so let's remember that. We'll be talking, and this will even go into what might happen on the indices. Walk like an Egyptian. Yeah, who knows what will be coming. Because if we get a little bit of dollar strength, mention the word softly. I'll be showing you the DXY, by the way, and we'll be looking in at those charts and what it potentially could mean. It will not be good for a lot of things, but there will still be great long trades to be had, but not in the areas where you're probably long now yourself. In short, dollar starts to get stronger. It is the God fiat, and we're the anti-fiat. We need dollar weak. It's been very helpful. It's been helpful for silver. It's been helpful for gold in the traditional markets. It's also been pretty helpful for a not overly impressive Bitcoin, but a steady climber Bitcoin and a pretty funky alt market if you're choosing right in the likes of Ethereum and one or two others that have been shining stars, but generally alt market good. So why is this so important? Well, it's not just about a single currency. It's also about the flows of money and where people go when they're scared. And remember, they're old slaves. They do the old traditional things. It's very hard to turn or to teach old dogs new tricks. We've all learned a few new tricks, even for an old dog myself. But the others, they are prone to run into treasuries, and that sees the dollar go up and the treasuries go up. This particular equity market, let's be clear, the Apple is now worth more than the entire FTSE 100. That means the 100 largest UK stocks. So things are getting kind of distorted. Yes, I know they new world order tech tracking, probably Apple cards, Apple everything, and they sure as hell big and cash generative, and they selling your data like a real whore to everybody who's prepared to pay for it, tracking you, stacking you, profiling you, managing the slaves, doing all that good stuff, much like Google, much like Amazon, much like all the other oligarchical reset sniper stuff that comes out of that third circle that I can't help vomiting out of every now and then. But anyway, back just to the charts of the money. What was happening earlier today? Well, first of all, let's talk Bitcoin, because this is the crypto market. Let's make it nice and big. We'll go through to the screens coming up to your top left, I presume, or maybe it'll be top right. Who knows? We'll see it in the mix. Head and shoulder has occurred. A head and shoulder has occurred and has triggered for me. Now, I'm not overly fanboyish about head and shoulders. There needs to be a real reason for something to need to turn around on crypto. And overall, I feel that has been the case. On the bigger time frames, we will go up to them shortly, the bigger time frames, but we're just going to look at the tactical now. It's still a reasonable time frame. It's a H4, counting fingers. How many must I show? Got there in the end, 4 hours. We've got a little bit of a draw it in the red because it's bearish. A little bit of a left shoulder construct here. with a little mini bounce shoulder to him. Or in fact, I could have gone a little higher, done that instead, and done like that. Probably would have been better. Let's do that again. Hate imprecision. To there and to there. So that's your left shoulder. This was after we'd had a very parabolic run up. You might remember this period over here. That had been very, very strong and did one of these low volatility to high volatility things. I did my hiccup session, which I took down because you were also mad at me for hiccuping. But it was about the low volatility expansion to the high volatility and the Bitcoin COT stats, indicators, tight squeeze, everything, and how it indicated up. I wasn't super comfy. I'm not going to tell you I was super comfy with being on the long side. I looked at it as a short point of view for a while. Why have I had a little bit of doubts? I mean, they printed 5 trillion. They printed more than the post subprime 5 years in literally 3 months. Why wasn't I just flagrantly bullish? Well, I am on the macro, but I have a feeling that we do another selling off leg. I'm feeling we do another sell off leg, and we see it in the charts where we didn't get this absolute dominating volume that you typically get with a huge, big, multi-year continuation pattern, which is our expectation with Bitcoin. So we've been going up, but it's never felt like runaway freight train yet with the real power and the real volume on Bitcoin. But it has had its strong moments. So we ran up from the 9.5, 9s, 10s, and we actually popped up. But once we got onto this ledge, you could see from the lines I've drawn on here, we channeled, and it's an upward grinding channel. Those usually lead to a loss of momentum, usually probability-based game. No guarantees in technical analysis. But what you're getting is everyone's on the script. All the little retail mice are coming in and buying the damn dips all the time, knocking themselves out and chasing. But there seems to be some degree of backing off distribution across the top. So actually the bulls are busy exhausting after chasing the pump. They're exhausting, and they're exhausting their way, going along the lows here. That was a key moment, and inside our premium community, we recorded it as such. We've fallen out of the channel. This helps us to start thinking bearish thoughts before you have to. That gets your mind ready that it isn't only a one-way game, because you start building belief structures around your existing game. It's exceedingly hard to flip. Even for people that have been in the game for a long time, you need to say, that's not a positive sign. We need to think about the exit. That's a second warning. You actually get many warnings. The market loves you. You're ignoring all of them. And then you're getting a shock and a fright, and you're getting out on a spill. And you're getting shit fills, and you're saying, my broker screwed me. The exchange screwed me. Give me a new exchange. Expecting a different outcome. That's what you do. Own your own outcomes. The market warns you all the time. It loves you. You don't know how to check with method, true 360-degree analysis. If you want to learn how, go and click the links below. Points with both fingers. You will be able to book a call with someone exactly like you that made the investment and wanted to learn more and find out. There are no salesmen, and you choose to buy if you want to or not. Okay, so what happened? We had a spill through that channel there. Should go back to the reds, because it's all bearish talk. Spill through, broadening structure, return move. That's not bullish. Widening out to come back and revisit what we call a basing ascending grind line. Then you spill down. A check-in point there. Boom. We already checked in there when we dipped through. Then you get a little double bottom, another check-in, rising wedge. Type 2 rising wedge. Pop out the top before you fall down. Kills everybody who thinks it's only a short, because they start jumping short here and they get pushed out the top. Where does it return to? This basing ascending grind line right there that has run the way through this channel the whole goddamn way. A final return move out of your rising wedge before you spill. Another sell warning. Another sell warning over there. Sell warning over there. Roughly at the same height. All the way up at 12K. You could have been down at 12. You could have been short at 12K if you had wanted to. I wasn't. I waited to see, because I thought maybe we'll get an inverted HVF, a second impulse, and then a third impulse, and then we'll sell from there. No such luck. It gave me a bear flag only, and I caught it there for a little bit of short. Yes, it's rallying right now, and some of you think that's awesome, and there's a whole bunch of buy the damn dip crowd, BTFD, I think, that might be coming in right now. But there's a real concern now because we have separate to this, ahead, down there, and you get this final shoulder, which was the return move to this line over here. And it's getting a bit messy on my chart, isn't it? Left shoulder, separately we draw the head, and then the final right shoulder. And the key armpit points, if you want, for the up moves and then the subsequent down moves after the head, all occurring over here. Giving that all as left shoulder, giving that as head, and giving this as right shoulder. That's in essence the draw. Just because you have a head and shoulder doesn't mean it makes target 9794. And in fact, just because you have a target doesn't mean it doesn't go lower. In other words, on the big time frame, we have been waiting and saying we never quite had the full down leg that we've been looking for. Remember the talk of first cup gold, silver nuggets? I'm not accepting the first cup gold, silver nuggets. We've not had the volume, we've not had the power and the sustained power in Bitcoin to justify calling this a first cup gold nugget trade. And it has fallen short of running the 13,900 high, which is just under, of course, the 14K. And in fact, our high is right there, which is in and around the 12,000 going for 500 mark. A great place for a relative high 3 and a subsequent down leg. A subsequent down leg. Yes, but we need triggers. We need reasons. And that's where the dollar index comes into play. The dollar index. And we'll be talking more about that. But could we get some confirmation on other anti-fiats about possible weakness? Yes, that's what's called 360-degree analysis. Looking all around, looking at correlated assets. The silver is being very much inverted. I came out on the Market Sniper channel and said I really like the pattern formation of the silver and said we could see 33. That is being put away. It's being put away. It was the final, looks like it was a final HVF and it may fail. We'll have a look to see if it failed. Why would it fail? Because as it was in formation, the dollar index turned really strong and crossed the entire falling wedge. We'll go to that chart next because it's central to this case. So if the dollar starts getting strong, for Bitcoin to go up, it actually has to go up faster than a dollar is going up. And the dollar usually gets strong when there's a bit of fear around, which means risk assets aren't very popular right now. Can you understand that that's not good for Bitcoin? Not good for Ethereum, not good for silver and gold as well. Because if people are going to run to the dollar, that means Bitcoin, silver, gold, all priced in dollars. Even if they're standing the same and holding their own, which they wouldn't be because it's a bit of a seesaw relationship. If you lift the one end, the other does go down. What that ends up bringing is a downdraft, because they lose both on the dollar strength and they of course get dumped for the dollar as well. So you get a slap on both cheeks, and you head down. Okay, so overall suspicion is there's a decent chance we may well see the 9794 on Bitcoin. We'll come back maybe and have a look at it. Time to bring in the dollar though, and have a little talk about what the Dixie's been doing. What the damn Dixie been doing. So this was the dollar index. Incidentally, we've been tracking this potential falling wedge for quite some time. In fact, we'll go up to daily and we'll show you the whole bang camoodle. So this is charting with the market sniper, the crypto sniper and the reset sniper. This is your dollar index. And belief systems are a great danger. We were very heavily long the USD ruble, a whole bunch of cross-pair currencies, and they were all looking like they were going to go into melt up during this phase over here. And what happened? That dollar index died. It got what we call a slap in the face. You'll learn about that theory. You ended up getting a new squeeze, first set up in a new trend. And then you go for overperformance. You more than make your target. You go into overperformance. You can learn more about all the annotations in this chart if you elect to come on board and improve your trading skills. It's going to be a polarizing event, guys. This reset is happening. It's a polarizing event. The UBI is coming. Everything is coming. Everything we call through reset is coming. Not because we're smart. We just read what they tell you and say they're going to do this. And we repeat it. So it's all coming. It's all coming. Vaccines, all coming. The whole lot. Health passports, all coming. All coming. Yep. It's all just well coming. So since we've been in this band, let's just remove that. Pull the screen through to the more modern history. We've been in this downward trend. You can see how this has been crypto supportive. This has been a very heavily crypto supportive environment. I'm going to drop it to a 12-hour. Squeeze it up, get a bit more detail. Very heavily supportive gold and silver environment as well as crypto environment. So this broadening pattern, you'll learn about broadening patterns. Grab a mini series if you haven't got a cent to your name. Go get some basics. It's for free. It's on us. Go ahead. We don't spam anybody. We never sell a list. This has been a falling wedge in essence. And during the period that we called for the silver potentially to have a shot at making the 33, something changed. We were here then. And it reversed rather strongly all the way across the wedge and has actually popped out the other side. It's kind of a hybrid of my green line scenario and my orange line scenario. You could have seen this chart a day or two ago if you're following at the market sniper, at the crypto sniper, and at the reset sniper. This is traditional markets. It went out on the market sniper. And this is the beginning of bottoming. When you start to make marginally lower lows, something I'll give you for free that you can have on me, a learning lesson. When you see classic setups for support and resistance traders, and each time they would probably be losing money, you are ending that trend. It can be going out for a topping or a bottoming. So the classic support and resistance traders, this is what I'm telling you in this box here that many people probably wouldn't have got. This discussion piece right there is all about that's your low. When you come around, this went literally a couple of ticks lower. Guys go short, new low. What happens? Instant rally, pain, closure, loss of money. Comes back down. That was the last low. Short it, small dip, rally. Spoils your trade. They would have probably got out on a stop loss somewhere in here. Another loss. Down it comes again. That was a new low. Short it. You make the bottom very shortly thereafter. Rally. New loss. Okay, most people would not, unless you're a scalper, you wouldn't have got in and got straight out. I don't know what your risk-reward ratios would be if you're shorting there and you're closing it a couple of ticks lower. You're probably not doing anything worthwhile in the long run, apart from making your broker rich by being overactive, chasing very low rewards with very deep stops. So just about all of those represent support and resistance shorters repeatedly being given losses. We refer to the marginally lower lows. So it's hammering out marginally lower lows, but it's quite clear that there's some green line retreating smart buying coming in. Also, your highs are only getting moderately lower, and now we have a first shot at maybe making a new high. That was the last high. We aren't done with going up yet. We've just got one candle backwards in our last 12-hour session, and we've actually popped out of the squeeze that is here. This falling wedge is now broken for me. But that doesn't mean it's all love and light. You can come back in for the dollar, that is. You can come back in all the way even to the halfway mark, which is what I'm highlighting on the orange line. This is sucking power. Even small moves here is sucking power and liquidity away from crypto, silver, gold to a much higher degree, because this is such a huge market. It only has to go up 0.5% over a space of 3 days for others to go down 3, 4, 5, and even 10%. So if people are running to it, what have we got? We've got all-time highs on the Nasdaq. We've got all-time highs on ridiculous valuations. We'll go past Tesla for fun because you all like to chat about it, even if you're purely interested in crypto. And there's a scope for a new sell-off. We're at September. Market takes new directions in September. The August is everybody sitting on the beach and coming back for the last few days of August and going properly forward. This is the first week back on September driving month. This is the beginning of Q3. Markets take new directions during this time. Further concern that has me assess that the dollar could be strong. The ADP number, that is a payrolls number, a company that does a huge amount of companies' payroll numbers. We're expecting 900 going on 1 million new payroll people. They can count. How many people are they doing pay slips for? They have a huge proxy of the economy because they do payrolls for a lot of companies across a lot of different sectors. They were expecting nigh on 1 million, just under 1 million, in the mid 900,000s. What did they get? 480 odd thousands. So significantly lower. What should have happened by that? What should have happened as a result of that? Let's get those numbers up exactly. Go to Forex Factory, guys, to follow your stats. What should have happened with that? Answers in the chats below. Let me see. What should have happened to the dollar on a lower employment number? Something that is showing less economic recovery, less economic growth. What should have happened? Let's see. Who gets the Lagos trip this week? Who gets it? Tell me what you think should have happened. Looking in the chats over here on my right screen, got Mellow Fellow. I don't see physical metal prices having a huge correction if dollar goes strong. No, I would agree with that. I think your premium will soak up any drop in actual nominal price. You're probably quite right. It might drop slightly, but premiums might rise. People are getting too smart to this one. So let's see what should happen. Waiting for the comments. Down. Dollar should go down, says Acito Rusko. Correct, my friend. Good, lovely chap, that one. Always appreciating it, the content, and always saying thank you. I respect you for your gratitude. Good things will come to you, Acito. And you are, of course, correct. What should happen is more stimulus, more print. Why? Because we're limping. We're not as strong. We're not sprinting, we're limping. Here were the numbers. So this is the data. Let's return back to the screen. Unemployment claims. Where we? USD. Here. Non-farm. ADP numbers. 428. Forecast 1,250. Others had forecasts of upper 900s. It doesn't matter. It's a bad miss. The number is in red. Bad miss. What did silver and gold both went up, tip. The correct response, Pavlovian, for a few minutes, got a slap in the face, and the whole thing crashed down. In other words, they want to buy the dollar. They want to buy the dollar, and they want to let go of gold and silver. After the Pavlovian natural economic response, both of them ended up trading lower and selling off badly. That should have underpinned gold and silver. So, you know you're at a bottom. Listen to this carefully. This is old trader wisdom, a saying. You know you're at a bottom when further bad news comes out and the market refuses to make a new low and trades up on it. So if you're talking about the dollar index, further bad news came out and you traded up on the bad news. That is, people have got heavily short the dollar. There's a lot of shorts to unwind. The bad news came in. There's no new money that wants to chase in. Everyone wants to lock in profits. Everyone's saying, well, it's bad, but it could have been worse. Besides, I'm too skewed that way. And actually, you see that market moving up. Remember that. words from the wires, words from the trenches, from people who have survived, maybe longer than you, could keep you alive. When the market refuses to go lower on bad news, you are close to the bottom. And it ties in technically with what I was just showing you. It ties in technically with what you were just being shown. Marginally lower lows, a squeezing falling wedge, and a pop out the top. We crossed the whole wedge breadth and we popped out the top after a shocking number. That, my friends, is a warning shot. It's a warning shot for Bitcoin. It's a warning shot for Ethereum. It's a warning shot for every little shitcoin. It's a warning shot for all your favorites in the coin market cap. And we've been seeing it coming for a while. Outside of my favorite lovely Ethereum, and we had a grand super macro disproportionate HVF, and bang, it made its target 2 days ago on Ethereum, and it was a hugie from the lows, right up at 478. Boom, it sold off straight away after making it, just made it, kind of like our gold, euro, and gold GBP. So since the 6th of August, the God markets, now the God markets of all the anti-fiats is not Bitcoin, it's gold. He's the super boss. That's a 7 trillion market. Okay? His alt is silver. Bitcoin is the God market of crypto, but he bows to gold. Gold was home first on the gold euro and the gold GBP trade. We showed you this. I will recap because this is important. This was on August. That was when things had already started to reach tops. I want to make this point very, very clear to you that we had go monthly. This key event, your super God market, was called by us on this channel years ago. And it would have been 18 and 19 and repeated ad nauseum. That this is your final target for the big pattern over here. And you got a small wind up that made that. So you get a little booster near the end, a small little setup that says, okay, now that we're this close, we can be a little more accurate. We're always conservative. You're going to get a little squeak further. Boom, done. That was called selling the high, courtesy of the most awesome technical trading method that exists, HUD volatility funnel method. Yes, you heard me say it. If no one else is going to say it, I'll goddamn say it. It started from highs up top here in 2012, 2013. This entire pattern that broke here in 19, part the way through 19. So from that high that formed in 2012 to 2019, you're talking about a 7-year pattern structure giving you the thread and the tweet that we did the blog post for, that we tweet out regularly, that precious metals is in a structural major macro bull. But there's a but that comes. When you make a target of such duration, time duration, I'm on a monthly chart, understand the scale, 7 years pattern setup, target made. Why is a target a target? Because you want to get out then, because nothing good happens for a while thereafter. That means progress decay. Up, down, more down than up if it's a bull setup. Sideways, off, a lot of wasted time, sells off, pullback, normally always expected after the target. So you're looking to get out the high. So you were given that high on this channel. Go and look at previous YouTubes. I delete no YouTubes, including the ones I get hopelessly wrong. They're all still there. I delete no tweets. They're all still there. They're all still there. Good, bad, and ugly. You were given that 17.15 and it was boosted to 17.33. You picked up another 17 euros for one of the longest net longs, where you could have been long from mid-19 to mid-20 and you would have seen 1186 take you to 1700. And by the way, if you were early with us in the community, you could have got long at around 1140. 1140 to 1733. Better part of 600 euros. That is over 50%. Over 50%. Good people. And you could have been leveraged on that, and you could have sat, and you would have sat through the coronavirus dramas, various bedwetting moments on stock markets, and you would have just stayed with process, and you would have had an electric carpet ride if you just stayed watching it. The number of green candles to red candles. Here they come. Let's count them for you because it's important to understand what has just happened. You would have got in there 1, 2, 3, 4 greens. You would have then had 2 reds, 5 greens, 6 greens, 7, 8, third red, 9, 10, and you were home on 11. You would have had 3 red months. You would have had a net 11 green months. Out of 14 months, you would have been up higher than the previous month 11 out of 14 times, and you would have covered the better part, going on the run from 1130 odd to 1730 odd on the euro. We gave it to you also on the pound. So instead of 3, let's see if you would have had 3 bearish months as well, or maybe a few more on the pound. We gave that to you. Now, the point of that we're doing all of this in such detail is simple, because these are your God markets, and it said the anti-fiats are going to rest soon, and it's the first to get home. So that was the first shoe to drop, and I'll tell you some of the others that dropped afterwards. 3 red months here. And you would have had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 greens, you would have been home in 15. 12 out of 15 months net up. And you would have been home, and then you got that by 70 cents. You sold the top, 15.78. Right down here, you got in under £1,000. Under £1,000 on the falling wedge. Pretty exceptional. Pretty exceptional if you're honest. This is not a crypto coin. These are normal markets. That's something that's gone from under £1,000 up by over 58, going 60+%. You would have had 3 months out of 15 where you traded down. And that would have come after your warning at the second interim level that says, don't watch roundabout now. You might not like the news. Stick to process. Go play golf. Yeah? Go play golf. Did I tell you last time what golf was for? Gentlemen only, ladies forbidden. That was the sport. The patriarchy. Disgusting. Okay. Anyway. So that was the gold. These are the gold markets. These all came in the 6th of August. Then we started to see Ethereum made it super disproportionate. We don't typically talk of these, but it was actually highlighted by one of our community members. And we've been biasing bull. That target 484.75 to the flipping nose. What a call by Nick Tipler. Not me. People trained by me. This is the amazing stuff you'll do. That whole target where we did the entire bottoming out. By the way, important not to forget, while I'm busy telling you about the shoe to drop for Ethereum after a major bull move. Listen, we're still crypto bullish and we're still gold bullish, but you are going to face a pullback. You are probably going to face a pullback in our opinion. Pullbacks in macro bull markets can be disappointingly short for the shorters, and reassertion can take place suddenly. Why? Because you're on the right side of the trend. These guys are going to go back to stimulus and killing dollar. Just because we pulled up the dollar index and said it's done bottoming doesn't mean it's about a turn and moon. Doesn't mean it's about a turn and moon. It can stop going down, churn along, bleed up slowly with many pullback legs and bit of graft, but it's going to make it much more of a headwind rather than the tailwind it was that Bitcoin had as a benefit. And as I've said already, Bitcoin's not been high volume. It's not been so super momentum. It's been in a grinding channel that it slipped out of. It's been warning us that it's a tired old mule and it's done climbing up this hill and it wants a little sit down rest and to go down to the village and sleep in a nice straw bed for a while. So it's been telling you, it's been warning you that it might need a leg. And we've been saying we're not ready to accept first cup gold nugget. The volume hasn't been there. A bit hard to illustrate that for you because there's a lot of different charts I have to pull up, but the volume and the clear breakout hasn't occurred. And we require a nice structural down leg. It's always going to fake you into the bull market and there'll still be a sell-off. I don't think the sell-off on Bitcoin will have half the devastation that the COVID-19 one had. I don't think we're going to have that level because the smart money suspects. I thought the smart money already suspected COVID-19 at the COVID-19 level. I was a little bit shocked. The problem was too many people leveraged in other assets. They go to get the easy liquidity is sold first. And that's what happened. And then momentum feeds on momentum. And people who are planning to hold say, bloody hell, I can't watch that half. I've got to get out. So then momentum begets new momentum. So this was still to this day surprisingly abrupt sell-off. Didn't see us coming back to the 4K and in some instances below the 4K personally. And that just shows you pain selling, not for profit selling, forced selling. And that's where leverage and that's where cross market, the participants are involved cross market. Some guys are in Tesla that are also in Bitcoin. Yep. So we'll talk about that stock market. Non-farm payroll is tomorrow, guys. That's what I was showing you on Forex Factory. Non-farm payroll is tomorrow. I saw what happened on the ADP. If we perform again and get an absolutely CAC number, and initially the dollar goes back and then just comes back to you like that, like the policeman you punch that's made of air, you know that there is real bottoming going on. Because it's done that already on Wednesday on the ADP number. It shook it off and actually went the other way. And I'm calling for a look one way candle. Initially, you get a little bump out of gold, and I'll be tying that up on an inverted chart of gold and calling gold back into the 1700s. Yes, we don't want it. We want the end of the fiat game. It's going to take its time until it suddenly starts sprinting. That's when the game changes. So, non-farm tomorrow. Here you have it. Usual time, the Canadians will be reporting as well. Expected 1.3. So let's be clear. They expected around that number. There. What did they get? About a third. That's not going to be good if you get about a third of 1400 over here come the time. We will cover the non-farm number and how to react. And I'm giving you an idea of my suspicions of what might happen initially. If we get a bad non-farm number, what do I think will happen? The link is below. You can come and join us. Full traditional markets with the non-farm number. Looking at the equities, the stocks, the Teslas, the Apples, the indices. We love certain indices. We're waiting for a number of great trades to come to fruition. IBEX. To the short side, IBEX 35. I'm not talking about my bird, my little Spanish bird at a port nearby. No, I'm talking about the index 35, stuffed with banks, construction companies, tourism companies. Yes, and builders, as I've mentioned, developers. So that ain't going to go well when they finally let it go. They're warming that one up for a COVID-19 Mark II. Wow. Time for Mark II. Northern Hemisphere winter, not far away. They're coming rushing with passports, vaccines, all sorts of delicious things to poison you with, and that is all going to be happening. So they need to warm the fear up again. The fear that they created. And I predicted that there would be multiple occurrences of this before the first had even started. Said whatever they bring, they will bring it again and again. It's to get control. It's about control and power to get under your skin with that which they want to get under your skin with. And that's winter. It's winter. We got the back end of the last winter with it going March to keep it warm through summer so that they could keep the momentum going. And now they're running it. They'll run it early. They'll spoil your Christmas and New Year. Make no plans for going far away this winter, in my opinion. I expect that there will be all sorts of problems. Get yourself a beautiful, handsome Reset Sniper shirt. Fits like a glove. Look at that. I'm looking in my mirror and I'm falling in love. The narcissism is just off the roof there. Anyway, back to the non-farm numbers. So big one tomorrow. Link below. Come and join us. And we do crypto. We take a half-hour break and we do a full 90-minute session afterwards, crypto. We will see what will happen. Are we going to continue to the downside on the crypto? Are we going to continue to the downside on the crypto side of things? My suspicion is it is possible. This is what I'll show you Stamp, by the way. And as I say, I don't think it's going to be an absolute bed chucker of an event, but I did take a little short on the head and shoulders. It covers me where I wasn't able to get out of Bitcoin and crypto, and I'm pretty defensively positioned. I don't see unbelievable upside. I would like to see, for structural purposes, the market doesn't care what I would like though, but I would like to see for structural purposes some form of a down leg that would bring in. It could either stop at this key level, but we also have the 7s and the 6s which came out of this, which we've highlighted immensely to you as well. So that would be a bit dramatic. If you took defense, you'd be grateful for getting twice your Bitcoin down there, wouldn't you? Especially if you get out mid 11,000s and you can get back in and around 6,000s. And if, by the way, what will that mean for Ethereum and that likes? Higher beta. Those will certainly be double. If you're not quite double, if you're 75% on your Bitcoin, you'll be stronger. And Bitcoin, we've not been a dominance fan, but now you'll switch back to dominance in the same way the gold-silver ratio. So let's talk about it. The God's God market. If Bitcoin is the crypto's God market, what is the anti-fiat's full God market? And I'm going to show you this. But I'm going to do it here. This is an inversion. That is an upside down chart. So a green candle is actually a red candle and a red is actually a green. I'm confusing you. Well, I've done it in purpose. I'm saying, what if this is my gold chart, and it is, upside down. So if you invert the scale, you'll get the original gold chart, how it looks now. What am I seeing upside down? We have biases. We have bull biases. We look at charts upside down. We look at them all ends up. We sniff its backside good and proper to make sure we get a proper understanding of what's going on across multiple time frames. So overall, if I look at this, if I'm looking at this, we're on the 2 hour. Let's give it 4 hour. You can see the big bull run. That's that sell-off. It's upside down chart, remember, inverted. You can see the scale goes up to 2,000. There's your 2,000 run. The key level of significance was broken, just broken. How much did we go at our absolute highest point? About $2,070. $70 through. Okay, it makes an all-time high. What does it just do? Previous high was what? 1927. Makes the 2,000 mark, runs the previous high, short. The support and resistance traders all go heavily long on the news of the new high. What do they get? Plummet, Mac plummet. That is a slap in the face. We showed it to you on the normal way round chart. Let's jump between the two. I want to provoke your autism at every level here and your dyslexia and everything else that's provocable. Whoop, we'll come back to that. Daily. What was I on? I was on 4 hourly. Touchy screen. That is what we call a slap in the face, a trend changing event. 2,000, just shy of 90. Perfect for just running. Note, we just ran the 2K level. Note the key level of significance all the way through there. We rising wedge up to it. Pop out the top. Spiller. Magnetic attraction for the key level of significance once it's run, utter exhaustion. It's like that tape. Have you ever noticed marathon runners always fall through the line? And if I moved it 5 meters further, they would take 5 more steps and then fall through the line, wouldn't they? They're not going to fall 5 meters before and go, yeah, that was just too far. Those last 5 meters, they were just, nah, can't do it. So that's how it goes. That's price behavior too. So this for me is a big inverted structure, which we'll probably see with its targets 1700s again. Great chance for you to get more gold cheaper. And this is how it looks on the other side. So, having been so optimistic for my silver, the tide just changed at the wrong time. It was a last setup too late. Probably going to fail. We'll have a look at it. But that for me gives good structure for an upside move, which will take you through the 1800 level by my reckoning. If it performs, remember this is now a counter trend. We're trading a counter trend. We're not saying it will perform. It can perform. Remember, 11, was it 11 or was it 6 years in the making? 2012 to 19 or 11 to 19. It was 7 years in the making pattern. It's entitled to have one setup that pulls back and goes the other way. But if it doesn't perform, it's just new information. It's ready to turn. And we have a time stop for it. You can find out how we utilize that. If it doesn't do it in a certain time, and you need to be on a program and a course to know how to do it. And you can book a call. It costs you nothing. We charge you nothing for it. And we're glad to talk to you. Real person, real trader. Just like me, only more sane, maybe less loud, and with equally nice t-shirts. Okay, so that's a first structure and a new trend. You can also get over performance on that. We mentioned that, and that's also theory that you'll learn. Okay, so that's gold. Gold is setting up a very nice symmetrical structure for a move the other way, which is a bit of a pity because we were I was pretty excited about silver, but I was a bit concerned about gold. It was looking a bit heavy, but I'm okay with silver outperforming gold. But at the end of the day, you cannot run away from your God market. And it was going so well. It was going so well. We bought in early on the little squeeze out of the falling wedge. Falling wedge is a very good sign after you've had such a violent sell-off. It was going so well. You jump in, and then it hit that point, and then the dollar index started playing its game and crossing and crossing and crossing. And if you want to see how that correlation is absolutely inverted, you think I'm making an excuse, it is indeed how it went. So if we go there and we hit the DXY and we put it on the same time frame, you can see it. As we hit September, you see the September? This one starts going up. That one starts going down. Not helpful, not helpful. So it's not overwrought silver strength regardless what currency. There is a little bit of a trade-off. If you start putting money, directing it into cash and fiat, and you may get a lot of people currently scared about the stock markets. Let's touch on that as well. What's been happening? Well, you can't look at all of what's going on around you and not be concerned. And the weak dollar has allowed the Nasdaq and other indices to get exceedingly high. Let's go back into single chart mode. Get the Nasdaq on. Silvers, as I say, I'm expecting it might fail. Could we be, as the dollar starts coming on strong, a major gap and a pullback? What did we have? We were calling the rising wedges, and each time you were popping out of the rising wedges. Squeezy, squeezy, Japanesey, up wide side we go. One full impulse, two full impulse, three impulse, and pop out the top. Now, a gap, quite a substantial gap, and selling off. A gap and selling off. That could be a key moment on your Nasdaq 100. Look into my eyes, look into my eyes. Nasdaq 100. One stock, Apple, worth more than the entire UK FTSE 100. Yep, that's how it is right now, current valuations. I'm not saying it shouldn't ever be that way, that one single American share can be worth more than the entire British economy's top 100, but it does seem like kind of stretchy. All the capital has been crowding into America. Dollar milkshake theory. He's right about that, Brent. He's right about that. Why? Because it's tech and IP. Watch the interview with Lynn Alden, Triffin's Dilemma. You've got to get dollars out to the rest of the world because you're the currency of last resort. You are the de facto currency of the world. Therefore, you have to run deficits. That means you have to be buying more of other people's stuff than they're buying of yours. It has to. So you crowd out services and tech, and you offshore all your manufacturing and bring it back in. That's what they've done. That's what they've done. And then You make payroll expensive, so you're now hiring people outside your country more than inside your country, and that's why we'll be doing non-farm tomorrow about the labor stats and how there is this huge polarization between people that are in tech and STEM subjects and are high paid, professional and services orientated versus the rest of the economy. Because America is splitting into two. I have warned you on Reset Channel countless times, this is a polarizing event. You can decide peasant or king. Peasant or king. And it's not just at a trading level. It's at an employment level. It's at every level. Insider and outsider. You've got to play your cards right. Be part of a community that does that. This is your Nasdaq. That is a pop out and a gap down. And it's still open and still alive today. What did you just do? You ran the key level of significance. 12,000. 12,000. The 12,000 line was run just like the 2,000 gold line level was run, just like the 12,000 was run on Bitcoin. 12,000. You just stick your nose through it and then you are exhausted because you've been squeezing up in all these. Now Tesla wants to raise 5 billion. Jesus, I'd raise $1 trillion. You've got vaporware stock price, which was at $1,500, big time lower today in just a single day. It's begging for a short. It's dangerous to short indices, especially in an inflationary proliferating currency environment. They will go up. It's what I call the hold the nose trade. But they will also have some nasty sell-offs every now and then. This was your March. I think we can do harder and faster. I think the sanity has been completely lost. You can short very close to 12,000 and it wouldn't shock me if you came right the way down somewhere here or even took out that previous low, depending what little panic, fear and loathing game they have planned for us. Who knows? Who knows what the control structure has planned for us? They love shake people out. They love shaking people out. Let's have a look at Tesla. Tesla. We mentioned the word Tesla. We've got to look at it. Tesla. $1 million market cap for every car they've sold. Wow. And this guy just got on his boat. This was the HVF to end all HVFs. One of our members came on. He made a couple of $100,000 on that HVF alone. And I said overperformance on this and this. And this is what you got. He's almost like regretting selling. He sold, I think, somewhere up, trying to recall now, 1,400. This was pre-split. What did they do? A 5-for-1 split. So what's 1,400? It would have been 140 times 2, 280. It would have sold in and around there. We gave them that on free view. Guys have made a couple of $100,000 on free view trades that we have discussed. And they've come on board. You sold off, falling wedge, and then, we'll do a stock split. Pumpy Mac Pumpy to later Mac Dumpy. But first, give me 5 billion for just a cheap amount of stock, just a small number of shares. Here, while my shares are worth ridiculous money. He can pay off all the debts that he's created all over the place. His solvency was in question at one point, way down here. He was sleeping in the factory as the 3 was being coming out. Now he's the king. He's the PR guy. This is a dark state equity, guys. Just like Schmoogle, just like Amazon. This is a dark state equity. They've got people operating it. There's no way you are managing the detail. You're a CEO of Neuralink, putting chips in people's brains, flying spaceships, making cars, and also all the other things from all of that. He runs and skims along the top. He is your PR. He's your replacement for Steve Jobs, a hero for our times, ushering in the great control structure tech agenda that will see you in all sorts of trouble if you go along with it, in this man's opinion. But let me tell you, they'll pump up their thing. They've got Rothschild's kind of money to keep this thing afloat, guys. Let's be frank. If you're Shortsville, they can kill you and run this thing up to 5,000. If Apple can do 2.3 trillion. But every now and then they'll let market forces take their play and they'll do a shakeout. Let's have some Robin Hood traders dinner and you get a proper sell-off. So where would it end up? This is after the 5 split. Everyone chased into the 5 split. It was the logical point to short, actually. I'm kind of pissed off I didn't have just a after the 5 split pump short, just for perp, just for fuck you sakes. But I didn't. Been very focused on the metals and the other things I should have had. And that could be your top. Your splits, let me tell you, they call for splits. It's the last little winkling out in what is a clear bull, excessive bull in tech, in US tech. It's not in UK tech. It's not in Japanese tech. That's why Buffett's now buying in other equity markets. Japanese, where there's real sanity in valuations. He put a couple of fingers in tech. You've got the Swiss National Bank dumping euros and going into, wait for it, Apple stock. A control structure who's supposed to be managing the money of its citizens has now become a hedge fund, and they're all got the same script, just like the Israelis, to buy Apple. Buy Apple. The little whispered word in the little secrecy cartels. Buy Apple. Isn't it expensive now? Don't worry, we'll make it whatever price we like. We've got more fiat that we can print to push it up to any number we want. And that's what's happened. You got a 2.3 trillion company, and the whisper one in downtown Tel Aviv is probably Tesla right now. People don't understand the tech. What, a battery? Okay, maybe I don't. Sure, he's doing other things, but that's Tesla. This is a car company. Anyway, it's a bubble. It's a bubble, but be careful about shorting it because you're shorting endless fiat. But if we have a contraction and the dollar is weak, this could be a time. Blow off after the doubling of the splitting of the stock in 5. Absolute opportunity for a lot of fluffy heads to be sheared. And they'll let the retail monkeys get sheared because they know they can let it run back. They'll run it higher later, and they're going to bring the fear. Tesla is currently overvalued. Good. Let's have a look at some comments. What do you guys say? Luke Jones, Francis is a national treasure. Which nation would that be? Can it be Liberland, please? Liberty Island. Yes, balls of steel, Mark Roberts, but the guy is smart. Let's not overlook that part, says George. Which guy? Elon. Yeah. We're up to 26% like. What's the matter with the rest of you? The 74% hate me. They're the 74% that lose in trading the markets. You know, every time I log into IG, it says 74% of retail traders lose money. The 26% win. By hitting that like, you're going to become a successful trader. That is not a true statement. I can assure you it's Fugazi. I watched the presentation. Elon stated we're doing this for recruitment. Yeah, as if Elon has a problem recruiting people. Yeah, the mystical power. They'll all be queuing up like Eastern European outside Hollywood directors' doors to be pumped out and to be abused and used. Francis, targets for USD ZAR, buy. So dollar, if it's going to be strong, the trades. What are the trades? I mentioned all the things that can go down. Crypto, gold, silver, all downers. That's not very nice. What about lifting some folk up? Well, what that means is, and it doesn't need to be powerful dollar strength because it's gone down really hard. I very much doubt it comes up as quickly, but I could be wrong again. A falling wedge is not an upside HVF like we had an inverted, which means a real breakout. But a falling wedge is a start of bottoming. It can churn and bottom for a while. But the people who run into trouble, my old friends, Turkey, yes sirree. Your kebab just got cheaper, brother. And it's popping out the top. We still have a big macro upside target. This is what I love about this situation. I've got trades on either side of this fence. Dollar wants to pump. I'm killing the lira. I'm long the USD against the lira. I start switching the minute it goes. You've got to just flip. You've got to know what your trades are. FX emergings are my trades. And potential shorts. Also short the IBEX. Waiting for the euro to say, wow, we've had a really expensive euro. We're battling and having such a terrible time. We can't sell jack shit because we're so expensive. Here we go, here we go, here we go. Give the lady a follow. Support the ladies of Twitter. Chi Girl, at Chi Girl. ECB concerned about EU rise. Rising euro stokes ECB worries over falling prices. They don't want deflation. Hey, we want a chance at inflation. We need inflation because otherwise we ain't selling any gear. The prices just drop and people postpone making purchasing decisions. Intensifies pressure for monetary stimulus in the Eurozone. Yep. Several members of the ECB's governing council told the Financial Times that the euro's rise against the US dollar and many other currencies risks holding back the Eurozone's economic recovery. Let's get this straight. Nobody recovers. They're all on an L shape, buddy. You're just going to fudge the numbers by printing more currency so that we think the GDP is once what it was. This is communism. There is no more capitalism, guys. They will fudge the numbers. They are creating more money. You don't realize that in actual fact, GDP's gone up by 3%, but the proliferation of currency was 10%. You've contracted by 7%. We've been contracting since 2007 and 8 if it didn't start at millennium. So this is the game. The communists are taking over. They're killing capitalism. There is no real capitalism. There's a crony insider cartel capitalism, and they are bringing their agenda forward in an accelerated way in the health area, in the biotech and the technological area. We've pivoted from the military industrial complex from oil to some degree into these industries. That is how they're going to get under your skin. USD is a trade, and some of the margins have resurrected back slightly more normal on some of the platforms, so you can trade it. Also watch the one that we've spoken of and that we've never forgotten about, USD Korean won. Big ass falling wedge. It did a fake break on us. Lots of things. You see, we're getting a little test run and then pull back. These guys love to drill. They'll do a drill on their big ass idea. This is the USD Korean won. You think I've forgotten about that one? I told you it was a super macro. It's going to take a while to happen, and then suddenly it's going to totally happen, totally quickly. And it'll come out of Asian market. You've fallen out of this falling wedge, and you're winding up. That's what's happening. And it's gaining momentum. And that was a trigger and got us real excited, and it ran and it looked like we were right, and then they killed the dollar. That's that Dixie down. Inverted HVF down. This goes only into a falling wedge. Reminder of the whole big trade. Let's show you. This one, we want credit for it when it happens, if it happens. Shout out the Market Sniper on Twitter. Give credit where it's due. If you're making a little bit of money, it's nice. We appreciate it. We like to be heard. We're always grateful, even if we don't see it and we don't get to say thank you. Monthly. Let's show it in a monthly. That is your setup, guys. This is your Asian crisis that is coming, that you don't even know what the headline will be for. You're going to trade it anyway. You can get in right now, here, on the break of that falling wedge. And most people, even the HVF traders by HVF method that use just-in-time entry, will be getting in after you. And we've already feigned and break once. We have 5 stages to a breakout. That's one of the stages that can happen some of the time. You chop the wire and then you pull back in. It's kind of like putting your foot over the line and then bringing it back to check if it gets bitten off. If you're good to go, there's no landmine there, off you go. That's what's coming next. Okay, look how it worked for you over here. That was the last Asian crisis, here in 96, 7 and into 8. We're even getting alerts as I'm speaking. That's a well-timed alert. Hey, Francis, have you been check out the Korean one? Yes, I'm busy on a live stream, busy checking out the Korean one. Thank you. Anyway, so up we go. Massive super spike. What have we called for? A super spike through 2,100 at minimum if it performs. And this will be Hong Kong peg will collapse, CNY, China, everything. You want to hear about this? I am doing non-farm tomorrow. What? You haven't bought yet? You don't like to understand the world and the markets? I'm sorry. I'm wasting my time. You didn't hit the like button? You're never going to be a great trader. Sorry, I'm wasting my time. No adverts? You want more adverts? More looky-likey adverts? Check this. Grammarly, someone? I don't know why they always give me Grammarly. I type like a chimp. Maybe that's why, with club fingers. But anyway, maybe that's why. Give me a hit up if you also get a Grammarly all the time. Grammarly. We'll teach you how to write real nice. Okay, thank you. I must be an illiterate 5-year-old. All right, so that's the USD Korean one. Guys, Bitcoin could be in a bit of trouble for a while. This is Crypto Sniper, remember? This is Crypto Sniper, and it could be in a trouble. And if Bitcoin's in a bit of trouble, it's still the god market of the larger complex of crypto. Yes, there could be one or two. We've been saying Bitcoin dominance is going to bleed out for a while now. Let's get it onto a weekly rather, get a bit more detail. Remember, we were the ones that kept you Bitcoin dominant. We kept you Bitcoin dominant when everyone else was buying shitcoin Mark 2, 3, and 4. We kept you Bitcoin dominant throughout this period. Throughout this period. Better part of virtually 18 months, 2 years. Going on 2 years. We kept you Bitcoin dominant. We said from that final break, couple of warnings from that break. We said Bitcoin dominance now to bleed out. We gave a full-scale alt call there. And since then, down, down, down. We swung into and we said the best, the most liquid, consistently, what might not be first, but will be second or third in the top 15 will be Ethereum. Net Ethereum. Ethereum has gone almost to $500. Almost to $500. It was at 88 at the COVID-19 lows. 88. And it was in low, just gone through 200s when we gave the alert. Traded 478. Now you've got to watch out. This is going to bleed out a little bit to the bottom, but if we get a dollar weakness, a dollar strength, my apologies, and a weakness crypto, you'll get a little bit of a rally like that period over there. Kind of flag like, maybe even quite spiky for Bitcoin, where it'll slow down in its loss of value. I am not a maximalist. I was net Bitcoin dominant and kept asserting it. Not because of maximalism, because it's the biggest brand and the chart showed me the money would be flowing first there. That's what did it. The charts, the setups, the structures. Now it's going to bleed out a little bit and soften. In the long run, I doubt the first coin is the best coin. I really do. But, you know, I don't want to upset anybody and anybody's emotions and all of that. Just like the first search engine, Netscape, the first browser, are all dinosaurs today. But anyway, we'll deal with that in another clip. You will have 90 minutes of me, traditional markets. We will see the number come in. We will see the reaction. We will assess it live, judge it live, and we will take trades according to this. This is going to be a far more pivotal non-farm than any of the last few that I've done, in my opinion, just standing up here on the mountain. We could be swinging. If this thing goes down first on the non-farm number, the dollar goes down, and then it just shakes it off and comes running back, you'll see the metals have a little bit of a rally first, and then sell off. And I will go short gold. I am investing in it, but at a trading level, I will go short gold for the trade. Why? Because I'm waiting for a third impulse. Something small, just like that, kind of between now and non-farm tomorrow. And then I'm calling for that to be on the downside. Much as I was showing you, that is it over there. Small pullback, please. Small pullback, please, and then we run. And let me say to you, if that happens, Bitcoin off, Ethereum off, on balance of probabilities. Silver, higher beta version of gold, I'm afraid it'll be off. Our silver setup will fail. It was one of the last, don't forget, it came after the gold, euro, gold, GBP made their big ass targets. So we were playing in extra time. We were looking for to still win the trophy, even though we hadn't sewn the gain up and we were in injury time. So it happens that way. Okay, I've given you the updates. I'm Francis. These are our sexy grey shirts with green now in stock. Drink coffee with me. Trading can be addictive. And grab our free mini-series in the links below. Let me have a little look at the comments before I sign off in full. I need a girl co-host. Yeah, choose me one. S&P got demolished. Yep, stocks down. Still using Netscape, says Erkan. Good for you, buddy. Hello, Francis. Greetings from Belgium. Freddie, greetings to Belgium. Check SPY. Lol. It says check the SPYs. You guys want me to do a quick run past the SPY index? I'll do it quickly. You'll get a lot more of this tomorrow. We'll have plenty of time. I'll go SPX. That's the upside down chart. So it's clearly going up. And I expect it will be going down on this way round. We'll do SPY this time. What a spiller. It's a real thriller. Yep, that's what happens. You can't pump your dollar and your shares at the same time, buddy, and make everybody else. It ain't going to happen easy. There's your sell-off. Look at that volume. Wham! Right after 358. Yep, very good. So it's kind of happening. Could your shorts on the indices? Most things down, except dollar versus FX emergings. Up. Shorts on the indices. Potentially good time. Yes. Tesla, the fluffiest of them all. Possibly, but dangerous. Understand. Dangerous. Have a target. Have a place you take off. That's the news. Lots more to discuss. We're seeing non-farm in tomorrow. Big pivotal moment. I'm Francis, the Crypto Sniper, coming at you today. Also the Market and the Reset Sniper. Thank you for watching. Thank you for being good followers and liking and subscribing. We appreciate it. Thank you for sharing especially. We appreciate that even more. We're here to give you good high value trades, but the premium gets served first. They know where I'm leaning before then because they paid, they've invested, and they want to be greater, and they've learned the method, and they will fully exploit it more often than just something for free. I'm sorry, it's how it works. If you really want to advance something, you invest it. You measure it, you grow it, you study it, and you learn it. These are reset times. It's going to be totally polarizing. Which side are you going to be standing on? Goodbye, goodbye, goodbye. You determine. You determine. We're here only to help. Only those that have decided for themselves. Bye for now. Oh, it's beautiful. Beautiful coffee mug.